Let me now bring on board Prabhat Avasthi, Head of Equity Research and Managing Director India with Nomura Financial Advisories. Prabhat, always a pleasure to have you back on ET Now. Thank you for joining us. Prabhat, in last 2 days, we've seen some repair work in broken down mid and small cap stocks, and in fact Nifty has now gone back to its pre-budget levels. So do you think much of the budget adjustment is now behind us?
Well, I guess, yeah, there was some disappointment, which, is, I guess, largely been absorbed by the market. But, I'm not sure why mid-caps actually broke down so much. I don't think it was really budget alone. There must have been other technical factors involved. But, the real impact of the budget in economy and, how sort of it plays out obviously will not be a short-term process. It'll play out over the year. So I think, yeah, the knee-jerk reaction is probably over, but, over a period of the whole year, what the budget has done will continue to play out as we go along.
So considering you were making the point about the takeaways from the budget actually playing down in the long term, have all fears on taxation issues for FIIs, have they been allayed and receded now?
Well, I think they have. Basically, you had this clause which was inserted, even though GAR was clearly postponed. This clause that came in about the tax residency certificate. I think there has been an ample clarification from the finance ministry. So I would think yes, all the fears have been allayed.
Is there nervousness still though on the currency with the kind of weakness that we've been witnessing? Well,
the currency is obviously has been weak for a long time. There is a big issue about current account, which is a well acknowledged issue now across the board. I mean, even the finance ministry officials have talked about it at length and various fora. Obviously, we have been writing about it for a long time as a house. So I think it's a well acknowledged issue, and the fact that it is one of the highest. It's the highest in the last 20-30 years history. Clearly, is a matter of concern, and so is inflation. If inflation is still running high compared to global markets, then you have, obviously have issues about currency depreciating, because the inflation differential have to be compensated in the long term in currency.
Prabhat, at a time when the general global attitude is risk on, the fact that Indian markets are massively underperforming developed markets and other regional markets, do you think in the near term, because of the stark underperformance, Indian markets, they run the risk of outflow because no one wants to associate with an underperforming asset?
I think it's a bit of a chicken and egg question, because if you were asking this question last year, beginning, India was one of the worst performing markets as you entered the year, but it turned out to be one of the best. So I don't know whether that really is the right way to look at things. But I think the fact that India outperformed last year and had the maximum inflows amongst the emerging markets of its classes, has sort of created that danger that there was a lot of optimism which was getting built in as the reform process started. So I think we sort of we're paying back some of that, I guess, because we had a massive outperformance last year. And the second thing actually is that if you really look at aggregates globally in terms of economic data, they have improved in US, for example. They have improved somewhat in other places, but in India, the data on GDP, as you've seen, obviously disappointed clearly, and some of the positives of reform were already built into the market valuation. So to look forward to further sort of triggers, there has been very little in way of triggers in the last 3 months. So I mean, that is the primary reason why the markets have underperformed. Earnings season was not great, as you know, Nikunj. So there have been no major fundamental factors left to drive the market up.
Prabhat, what explains the outperformance with the IT basket? And do you think this is just the start of it all, or is it now time to take your money off the table?
So IT was one of our overweights for this year when we put out 2013 strategy, and the basic, very simply speaking, our call was that one, it is a currency hedge, and we as a house are concerned about currency. We have our forecast of a depreciating currency. Secondly, obviously US data has been much better than people's expectations, and the US recovery clearly feeds into the to the demand eventually for IT companies, which have seen a very, very slow year last year. So the markets are a bit ahead in terms of, obviously sensing that recovery, because the recovery so far has not happened. And even IT companies are talking about a stabilizing environment, in terms of growth. The sort of negativity that was out there is no longer present. And finally, I think valuations had come to a level last year after the poor performance, which were very attractive. So I think all these factors have conspired to sort of make it outperformer.
So Prabhat, at a time when earnings are no longer expanding, in fact earnings are contracting, is it safe to assume that for this year Indian markets are unlikely to give a double-digit return? In fact, they could give a negative return?
So I think that's a very tough question to answer, in the sense I don't think they're going negative, earnings negatively, because I think you might have had a poor quarter, but all said and done, you have fairly defensive growth also in, if you look at the composition of earnings in India, you have large commodity earnings. Some of those, for example, petrochemicals, etc., will probably do all right. You'll have, tech doing okay, consumer doing all right, pharma doing all right. So and banks are doing okay in terms of earnings growth, at least, which is a very large percentage of total earnings. So I don't think you're going to see negative earnings, but obviously the growth has slowed down as GDP has slowed down. So our contention was that, if the risk on remains, then you probably get, your returns which are linked to earnings, which are, our guess was not 13-14%, which was being forecast by consensus, but the likely scenario was going to be about 8-9%. That was the forecast. Since then, I think, there has been some disappointment in growth, which has sort of come through in GDP numbers, etc. But I don't, between negative growth and positive, negative returns and positive returns, the basic, determinants of that will be one global scenario in terms of risk, which deteriorated marginally because of Italian situation, and also, I think domestic growth. So I would think that, single-digit returns is something that you can, sort of see best case if the global risk sort of flares up, or there are issues with respect to capital flow into the country. Given a current account, the returns could be lower.
Prabhat, at a time when in general you were not that constructive on the Indian economy, if I look at the sectoral preference, IT is there, FMCG is there, but you also have an overweight stance on power. Now, why is that?
So it is very, power is essentially because of the fact that, power is not really so much of a growth play on India. It's a scarce commodity. It's more of a reform play. Now, our belief is that, all the problems in India in terms of either growth or, the investment cycle coming off, etc., are essentially related to the fact that power sector has faced serious headwinds in terms of either fuel scarcity or lack of, or policy issues, for example, SEV losses, which have, tariffs which were not raised, etc. So to get the investment cycle going and to get the growth going, the government will have to focus a lot on an energy sector, which might be oil and power. So reform momentum, I think, will probably sustain at a level, and we believe that, outside of the budget, reform process will remain strong in these sectors. Also, if you look at, some of the stocks in power sector like NTPC or, for example, Power Grid, you have fair amount of certainty of how the earnings are going to grow. The capacity additions, the returns, they are regulated return entities. So in a slow economy, their earnings are far more protected, and that also gives you some sort of, protection against, slow growth in the economy.
So, Prabhat, can I safely assume that NTPC could be a good large cap dark horse for this year? The stock has done nothing, there is predictability, and if they continue to add more capacity, the book value for NTPC will only come down.
Well, book value will go up, sorry. So, I think, that is our sort of thought process. And at the margin, obviously, they are getting some mines back, so that's also positive. So, our thought, and, you have one big technical, hangover because people have, there was a big, issue which was already out of the way. So, from that perspective, I think, it makes sense for the full year.
Prabhat, there's RCF lined up tomorrow and perhaps sale coming up next, by the middle of the month. Is there enough appetite in the market to soak up so much paper?
Well, I think the paper will probably be soaked up if it's offered at the right prices, but clearly the kind of, the government needs to raise a fair amount of money. They've budgeted for it, so they'll have to offer more paper. So unlike last year where, there was a lot of inflow and you didn't have that much primary paper lined up, this year will probably be different. That's another reason why sort of market has become, less buoyant despite reasonable inflows this year from FIIs, because there has been a lot of soaking up that. Well, is there enough appetite? I think obviously there's an appetite for the kind of paper and the kind of price you come at. So you have seen the difference between, NTPC and MDC and ONGC. I think that makes all the difference. And I think government has become far more savvy and they will basically price it, I think, right. So I think they will be uptight because I think the government thought process has become much more clearer as the time has gone by, as we've seen last year.
Would RCF or SAIL, any of the two names interest you?
Interest me personally, no, but we cover SAIL and we think it's cheap, but the challenges with steel sector are global. That is one, and I think there have been disappointment in terms of how long their capacity addition has taken, because by this time they should have been through with their capex, but the things have dragged on a lot longer than was expected when they embarked upon their ambitious program to double their capacity. And we are still sort of, again, 2 years away, I guess. So there has been a shifting of goalposts, which was because of which that's just probably got tired. We don't, cover RCF, of course. But the valuations have now come to a level where sort of, is very cheap. So there is no optional value for additional capacity which is built in the stock price. There's a question of basically patience now, because if they do increase capacity to 20 million tons over 2 years, then hopefully there is a lot of value in the stock.
Prabhat, if on 19th of March RBI does a 25 bips cut, will that surprise the market or will that disappoint the markets?
25 basis cut, I think, will be positive. Our view essentially is that the cut is in May. That is our economist view. So from our perspective, it'll be positive. I think it'll probably be positive for the market. I don't think people are expecting more anyways.
Prabhat, you also track the entire auto space with a magnifying glass, and your preferred bet there is Mahindra and Mahindra. First, let's discuss the auto sector in general. Do you think in the near term the auto space could go through a process of derating, because passenger car market, for the passenger car market, competition has intensified. For the two-wheeler space, the competition has intensified. There is a visible slowdown in both two-wheeler and four-wheeler sales, and now our understanding is that most of the auto companies are experiencing labor problems.
So I think, we have been underweight autos, and one of the reasons is that we believe that, discretionary consumption spending will slow down, given the fact that there is a slowdown in economy, there's a slowdown in capex, which creates new jobs. There is a slowdown in government, sort of spending. So clearly, these factors will weigh down on the demand for auto sector. On top of that, all the factors you mentioned obviously don't help. So the kind of growth trajectory you had in the last 5 years is not. In fact, it will be much weaker than that. But the stocks have reacted to some extent. There's some stocks which have reacted down. The multiples have come off to some extent again. But I agree with you that the sector will continue to face fundamental headwinds, because of which it will be very difficult for the stocks to perform.
Vadavasti, final questions. For next 6 to 12 months, what do you think will be the big underlying theme for Indian markets? Sit on the sidelines, hide in defensives, or put money to work?
Well, I think, given the valuations today, and again, Nikunj, it all depends on where the market is. And I mean, for today, for example, I think, the market valuations are rich enough to sort of be building in, some amount of hope and optimism, which I think, might not be justified by the near-term data. So I think theme for the time being will be defenses, and global growth is picking up, so it might be exporters as well, like technology and pharmaceuticals. But if the market was to completely sort of give way and fall a lot, then obviously the theme will change, because valuations do matter, as we have seen in the past as well. So for the time being, given where the valuations are of the overall market, I think it's still defensive, but it could change depending on the market level. And I think one big theme, obviously, as you know, once the 6 months are over, will probably be elections, and a lot of focus will shift to elections. And you know, what happens at that point in time is that, you know, there will be not that much policy stuff. I probably will see a fair amount of policy stuff happening even in next 2 or 3 months. But once the elections, you know, approach, and then I think, you know, there will be a slowdown in the sort of, you know, reform process, if you were to call it that. So then the fundamental factors will take over, and if the growth is not picked up by then I think the theme might remain defensive for a longer period. So I mean, that is, so from market perspective at this point in time, I would say still defensive and exporters.
Okay, Prabhat, good chatting with you, and really appreciate you taking the time out and joining us.